Ladies and gentlemen, welcome back to the channel. I hope you guys had a fantastic weekend. What? Okay, we are live, baby. We are back in action, live, ready to go. I hope you guys had a fantastic weekend. It's gonna get a little bit interesting here in this upcoming week. I know we're starting a little bit later than usual. I had some things I had to take care of, and I guess that's just life. But nonetheless, there's a lot of very important things to go over. Futures are flipping. Look at that. It's not just Russia. China also contributing to higher inflation worldwide, report says. Well, no shit. China is contributing to inflation worldwide. What kind of joke is that? Are you joking with us, CNBC? Are you joking? Huh? Let's go, baby. Is it fair to say that I missed you guys? Is that fair to say? Is that fair to say, or is that clickbait? Is that clickbait if I say that I missed you guys? It was a good weekend though. I hope you guys had a great weekend yourself. Jennifer Hendricks, yo, Cheese Chaser, what's up, Tyler? Let's freaking go, baby. I like those same messages. Cheese Chaser always. He says, "What's up, Tyler? Let's fucking go. Let's go, baby. Let's get pumped. Let's get ready. Look, the futures just went red. Besides the NASDAQ. Ugans bet. Always with the bet. Chris, win Lambo. Me too. 2 apes and a popcorn every time, baby. What's up, baby? Let's freaking fucking go. Big Blue CNC Super Show. Yo, new month, new options. Exactly. Nice pick. Nice pick. What do you mean, nice pick? Did something change? Did something change? I don't know. What's up, Rick Keynes? Same. Rick James, bitch. That's what I've been saying all day. Rick James, bitch. Missed you too. Yes. I specifically missed you, Trading Whitney. Super Show, we are a family. Oh yeah. We are ready to make some money. And that's what this is ultimately for, is to, make money and hopefully one day meet up in the Bahamas or Honolulu or anywhere besides the Bermuda Triangle. I ain't going there, but anywhere else, we're game. Here, AMC to the moon. Yeah, this is going to be a very huge week. Win Buffy bike. Man, you remember the Buffy bikes? That was a good time. Who remembers ripsticks? Does anybody remember having a ripstick? Man, give me a ripstick right now. I will go crazy. I will show out on a ripstick. I made some homemade cheese sticks this weekend. Oh my gosh, you're crafty, bro. That sounds wonderful. Did you dip it in marinara? Don't tell me barbecue sauce. I will ban you right now, Super Show. I'm just playing. Super Show coming in clutch with the trades. What do you have on deck, Super Show? Cheese Chaser. Do we got to meet up? AMC going to make that happen. If it don't, we still got to do it. Who remembers my buddy? My buddy. Yeah. No. AMC's like, okay. Let me just, can I vent? Can I vent for a second about AMC? Can we just let it all out there right now? Or is this too early in the live stream to start venting? Or talking about food? I feel like it's a little early for that too. A little bit early for the venting, but some people, let's just say it how it is, are soft as hell. Just soft as hell. I I try to not let comments get to me. I really don't, but there's some people like let's see actually. Let's see. What video was it? This video. Look, just tell me this video right here. I had people saying, I mean, they always say this, but what of all of this is clickbait? What if this is like giving you a misconception about what the video is for? Like DTCC haircuts, what this really means, AMC price prediction, sell in May and go away. You know, this could only be the start of the 2022 stock market crash. This is what margin calls look like. Like, shit, snowflakes out there, you gotta pull up the Google Trends? Is that what we gotta do and pull up margin call? Is that what we gotta do? Okay, we will do that. We will do that since my word does not mean anything. Like, I did not already look into all of this. Like, look, margin call is through the roof still. I mean, even back here, you know, March 13th to 19th, through the roof. Starting to trend back up. If you look at this in the past, let's go to 04. Like, bro, people are getting margin called right now. The markets are insane. We're at the highest level we have seen in March 2022 we have ever seen since the movie Margin Call came out. In, what was that, 2018 or 2011? Yeah, dude. It's crazy. It's crazy. Clickbait is 30-second Benji videos. Yeah, that guy has a lot of clickbait. Ken Griffin, I hate the name, but I love you. Okay, I love you. Wherever I go, he goes. There we go. I'm not sure yet. Probably Disney puts. Disney, I would be a little bit careful because Disney has that I don't want to call it like a misconception, but it hasn't the overall conception of being like a travel play, right? Because of their parks, and those stocks have been holding up a little bit better through all of this. You know, people know travel is hot, so if anywhere you're gonna go, people are going to travel as of right now. But yes, people are getting margin called right now. Now, we are in a very interesting situation because the low of the margin debt back in March during the crash of 2020, I don't know how many people were invested in the markets, but like you had Bill Ackman, you had people going on CNBC saying that stocks were going to zero. Like, this was super fear. The margin was at 479. Now, the margin debt, the last reading we got, was at about 800 billion. So there's still a lot of margin out there. And what has been happening, and we're going to circle this back to AMC because I that's really what got me on this rant about venting and all that. But when you see margin debt this high, and you've seen small caps, mid caps that have got destroyed, like absolutely annihilated. Like my SoFi position, I'm down 55% on. My DraftKings position, I'm down like 65% on, right? Even Fubo, I started buying like a week ago. I'm down 32% on that. Like, you've gotten destroyed in those small and mid cap stocks. Where is the money actually at? Where is the margin concentrated in? It's in the safety stocks. A lot of it is in Apple, Amazon, Google, Tesla, Nvidia. What has happened to Tesla? Well, it got destroyed. What has happened to Apple? It's starting to get destroyed. What happened to Amazon? It got destroyed. Google, that one could still come down, you know, in a substantial way. And all of them could still come down in a substantial way. So once those safety trades, and especially once oil stocks come down, commodity trades where people are hiding out in their money, hiding their margin, right? Once those really come down in a substantial way, you can, one, get a bottom. Because like during the crash of March of 2020, if you guys were not invested in the markets, and you know, I'm not calling you guys out because you guys know your shit, obviously you watch these live streams, but nothing was saved. Everything got destroyed, right? That's when you can finally hit a bottom. But when you get small caps, then mid caps that go, there's still safety areas in the markets for a while now. Once you get the safety stocks that come down, maybe not as much as the small caps or the mid caps, but when they come down, let's say 20, 30, 40%, that's where you can actually get a bottom. Now, to full circle this back into AMC stock, this is what I have been talking about for the last 6 months. And it's unfortunate that you know, people don't realize that. People come out and say videos are clickbait and all that. But this is what we have been waiting for. I am more bullish now on AMC than I have ever been. Why? Because when AMC stock actually does see a big catalyst, look at, Redbox, look at these other stocks that have catalysts that are starting to fly. There's a reason behind it, right? There's a catalyst behind it. Liquidity is low, so shorts are forced to cover. It's not like you can go out and get a loan for 2% anymore. You got to go out and get a loan for 7 to 10%. It's a lot more expensive to remain in those short positions, especially if a stock, goes up and stays up for a while. You're going to lose on that. You're going to lose on the loan. You already don't have enough collateral to put up in your short positions. And the DTCC comes out and says, hey, we're giving all of your collateral haircuts. We're not doing this anymore. That's another big key. But why is the DTCC actually doing that? Because they think this regime of lower liquidity, of potentially stocks staying down for longer amounts of time, is here to stay. They do not come out and give collateral haircuts back to back to back to back. Like, I think this is the third collateral haircut that we have seen in the past year. It's telling you something. It's telling you that potentially the markets might not hit a new all-time high for quite a while. And I'm not saying that to be the doomsday prepper, the bearer of bad news. Build a bunker if you want to. Probably not a bad investment here in 2022, but that's a topic for another video. But it's basically telling you that you're going to see lower liquidity. You're going to be primed for potentially seeing short squeezes across the board in a very dramatic way. Not whole sectors, right? Not all small caps, but ones that get catalysts that have high short interest. Like, look at Beyond Meat the other day. I hope you guys seen that video. I kind of broke it down. Beyond Meat went up like 40% off of a stupid comment from McDonald's saying that it was a permanent item on the menu. It's already on the menu. Like, McDonald's came out and said it was a staple on the menu. Stock went down dramatically, and then it went back up like 25%, right? So, I think this is what we've been waiting for. I think when it comes down to it, some people are just soft. They just don't understand. But I'm glad you guys do. People that actually hold are going to be the ones that make most of the money, in my personal opinion. Clickbait is better than jailbait. That's true. That is very true. That's a good way to look at it. I'm thinking UVXY calls is the play. Possible. I mean, the S&P closed at its lowest level for 2022 on Friday, which was a huge sign. Looks like futures are coming down a little bit, at least in the S&P and the Dow. You don't have earnings from large tech to hold the markets up anymore, right? So, that was a big thing people were leaning on, that, earnings would save the day. And maybe I was a little bit early with my assumptions that like Apple and other stocks would see bad earnings. But at the same time, they weren't the greatest. They could have been a lot worse. And I was expecting like Apple's earnings to be worse than what they were. But there's no stability there. Like Apple projected to see like an $8 billion loss from China alone, and China accounts for like 20-30% of all their revenue. So people are kind of saying, hey, is it actually China locking down and supply problems, or is it a demand problem? So a lot of uncertainty. And just so you guys are aware, this will help you a lot over the years. The only thing the markets hate more than bad news is uncertainty. That's the key. Uncertainty equals volatility and potentially a lot of pain in the markets. Even when things are bad, like bad news is nothing compared to uncertainty. We can handle bad news. We can't handle uncertainty. Beyond is a permanent menu item in my house. Yeah, I I've I've had beyond no, I had Impossible chicken nuggets. They're expensive though. That's the only thing. They're just super expensive. And then uh the Impossible Whopper with cheese. I always get that from Burger King when I go. I plan on holding on forever my stocks to my kids in the future. Hopefully they'll be worth a lot of money by then. Oh yeah. I mean, solid businesses will be worth a lot. Especially like look at Kathy, right? Kathy Woods. If you are an investor investing in a lot of high growth stocks, like I know holder of the shares, you buy Mullen, stuff like that. That's a high risk, high reward kind of strategy. Just like Kathy Woods. Kathy Woods invests in innovation. She doesn't expect all of those stocks to work out. She expects one or two of them to become like a Tesla, right? Maybe it's Teladoc and Zoom. Maybe it's two of her other holdings, right? She doesn't expect all of them to win, but the ones that actually do can be massive winners in the next, 5, 10, 15 years. So that's the key to it. You just got to stay in the game. It's here for Tyler. Smash the like button. Yes, smash the like button and tickle the like pickle. Not sure how much I missed, but what do you think about these DTCC haircuts? We talked about it a little bit. Didn't go into it too much, but I think it's like the third time it's happened in the last year. And what it's really showing you beyond anything else is the instability in the markets. That the DTCC wants to make sure that hedge funds, banks, institutional investors, everyone does not collateralize stocks that could potentially fall another 50%, right? So what is that bottom line telling me? What do I get out of that? It shows me that we're in a regime of lower liquidity. Stocks are probably not going to bounce back, in a substantial way for quite a while. And we're basically primed for the MOAS for a very long time. I mean, these guys know things that we do not, right? Like, I'm sure Citadel has a pretty damn good idea how they're going to set their algorithms for tomorrow morning and what they're going to do to the stock market, right? And I'm sure DTCC knows that. So I think more than anything, it's a clue into what to expect for the midterm future for the next 1 to 3 years, right? I don't think this is like an '08 moment, but I do think 2022, you're probably not going to see a new all-time high in the markets. After the midterms, which is like November, that's when I would expect that you could possibly see an all-time high in the markets. So I think it's really a clue into what's going on. Now, this week, I hope you guys realize it's going to be very, very important because you have the Fed. And given where the markets are at right now, not a huge move in futures. They're pretty flat. NASDAQ up 0.19%. Dow pretty flat. S&P literally flat. You're either going to see the markets break down close to 400 on the SPY, or you're going to see the markets bounce like we did the last Fed meeting. Like I wouldn't necessarily gamble on move one way or the other. Like I expect there will be some back and forth action up until Wednesday, up until the Fed, and then you will get that final confirmation after the Fed, but especially by the end of the day, if not the next day. So really the day heading into the Fed, no matter if I scalp trade the SPY, bullish or bearish tomorrow or whatever else happens, I want to go into Wednesday neutral. I don't really want to have any exposure to the upside or the downside as far as options, because it could go either way. We could bounce again, or, you could sell off down to 400, potentially 360 as the lower end range. Like a lot of stocks, like this is a 2020 peak. A lot of stocks, like look at PayPal, substantially under its 2020 peak level at like 130. Like a lot of stocks are down there. What's holding up the markets are your safety trades, your Apples, Googles, Tesla, Amazon, stocks like that. So if those guys go in a substantial way, then you could definitely see a lot of, pain in the markets. But with the Fed, though, this is something that is key. Like, a lot of people don't understand this. And by like people, I don't mean like people on YouTube. Like, I don't mean you guys. I'm more so talking about like financial analysts, right? Economic analysts that study the macro trends and where the economy is going and what GDP is supposed to be and what the Fed is going to do. People that study these kind of things, it's like they don't understand that, hey, we expect a recession in 2023. Well, we just got a declining quarter of GDP growth by 1.4%. Technically, the next reading coming out in early summer, if that is negative, we are in a technical recession. Now, beyond that, what does the Fed do during a recession? Well, they cut rates. So, believe it or not, this is very, very bearish. People are kind of looking at like the GDP fall 1.4% as a bullish thing. Maybe the Fed does not have to act so aggressively. The way that I look at it is the rates are too low. Even if we're heading into a recession, the Fed is going to have to raise, possibly more aggressive, to be able to cut rates once a recession actually comes. Because the last thing you want is stagflation. Stagnant growth, right? A recession and high inflation. Well, the Fed's got to raise rates to get down inflation. Well, they also have to be able to cut rates when growth slows down. That's what the Fed does. They raise rates, they cut rates, to stimulate the economy or to accommodate the economy. So I think the markets will realize, and I could be wrong in this, but I think the markets will realize that, hey, even though we're getting bad economic data, like terrible economic data, the Fed is going to have to raise rates probably more aggressively in the short term, like in the next 3 to 6 months, a lot more aggressively compared to what people are expecting. So, like, it would not surprise me. We get a 0.5% rate hike this meeting. Maybe we get a 1% increase in the June meeting. You have to do it. You have to do it. Like, the last thing you want is high inflation, a recession, and the federal funds rate at 0.25% or 0.5% or 0.75%. You want to be able to cut rates once growth slows down. So, a little bit of food for thought. We'll find out exactly what the Fed, expects and what they want to do here. Coming on Wednesday, you're going to get the report at 2 p.m. and then you're going to see the Fed Jerome Powell come out at 2:30. So House of Cards failing, yeah. So effing rich. We're how can we know if DTCC has positive effect on AMC? Well, I don't really think like the DTCC has too much of a direct effect on AMC. Besides, like it's not like the catalyst that starts the MOAS. Like it's not like that. But what they do is basically make it more expensive to service a margin call when AMC stock does actually start to go up. And this is what I've been talking about for the last 6 months. So this is exactly what I wanted to see, right? Liquidity being restricted, DTCC coming out and doing things like this. It shows that, hey, if they're not as confident in you putting up like Apple stock as collateral and they're taking haircuts even on those kind of equities, situation's not looking so good. That is right. They have to rein in this inflation. We're going to be in big trouble. Yeah, it's inflation, but it's also just the economic activity as well. Like the Fed's game plan, what they always do, they raise rates, like from 2005 2008, they were raising rates very aggressively. What happened 2008? You know, all the corruption, you know, collateralizing bad debt, betting on that debt, you know, the mortgage sector just failing. Banking sector, everything was basically failing at that point. They come in, they cut rates to zero, stimulates the economy. 4 years later, stock market hit a new all-time high in 2012, right? But if we're heading into a recession and GDP is already slowing down and dropping at a 1.4% pace, we haven't raised rates, right? There's nowhere to take the federal funds rate. There's no way to help out the economy when shit actually does hit the fan in a big way, right? You have to be able to help the economy when it goes under. Hold your stocks like you want to hold the girl on Tyler's screen. Amen, brother. Amen. Oh yeah, she was fine. She was fine. That little ad. Pfft, okay. Shit in the fan. Yeah, shit is in the fan. If you're holding a company like AMC GME, you're hedged against a crash, and they will need liquidity to cover their bad bets when they get margin come. Yeah, it is somewhat, you know, of a hedge. Like a small amount could go a long way once the actual squeeze does happen. Everybody knows this is our time, 2008 all over again. Hedge funds over leverage and banks allowing it. Jail time is what's needed. Yeah, I'm a huge I'm not a fan of market makers at all. Like it's so fraudulent. Like it's ridiculous. Like if you like scalp the SPY like I do, like if you watch it on a 1 minute time frame, like, dude, they do whatever they want. They push the markets up huge, drop the markets huge, push it back up, drop it, push it up, drop it. Like, it's very fraudulent, very. The Wall Street is the most corrupt place in the world, by far. Big Red Apple, everybody knows this is our time. The company I worked for closed the doors in 2008 because of that shit. Yeah. Lots of companies did close their doors. 08 was I mean, the problem with 08 was kind of what's going on now, right? Using like a little bit different. I can't be the one to say like this is like '08 directly, because they were taking bad debt, bundling it together, rating it as good debt, and then betting against that bad debt or that good debt, someone might say. And then, yeah, wonder why the whole system failed. It's a big mystery, I guess. Do them collateral damage letter coming out have any effect or change to what's going on? Yeah, the collateral situation is really big. I mean, it's not going to be the thing that causes the most, but it's a big deal. It's going to make 2008 look like January of this year. Yeah, I mean, it already looks like really bad. Like, it's already a pretty decent drop from the top if you look at it on the weekly chart. 08's like way down here, though, so. Crash of 2020's down here. Like, you could probably bottom out at like 360 on the S&P 500. Like, that's probably where earnings would support the valuations, like 360. The problem with trying to make money off of it is actually timing it. Right? You kind of never know what is going to be the thing that breaks the camel's back and ultimately, destroys the markets. But I think it's very possible we head to that $400 level on the SPY this week. how's the yen looking? Yeah, let's go ahead and pull that up. The yen. Yen. Yen to US dollar. Jesus Christ. Oh my God, dude. That's insane. That's insane. Like, I don't know how much you guys can actually see this right now. Like, look. 1 US dollar equals 130.05 Japanese yens. And I talked about this correlation when we were on live last time, but like, look, you know, like the .com bubble, right? 2000, everything pretty much started to hit the fan, right? The yen went up a lot and then came down. You want to see, typically when there is fear and instability in the world, in US markets, the yen, this chart will go down. Like you've seen from 1998 all the way to 2000. The yen went from 144.20 yens per one US dollar all the way down to about 102 Japanese yens per $1, right? December 1999. And then kind of bottom out and came back up a little bit. And look what's happened over the last, dude, the last month. It's straight up. Like, this is telling you that there is a big problem right now. That, like, literally nothing is safe. That's what it's telling you. Like, look at the 5-year chart. This looks like a damn momentum stock. Right? You've seen the crash of 2020. The yen goes down. People flood into the yen. It's seen as a safe haven currency. And when it goes up, it's being sold, pretty much. So, yeah, nowhere is safe, ladies and gentlemen. It's a leading indicator, in my personal opinion. Like you can see from the max chart, you know, the yen, especially in 1998, it peaked out. It was 2 years later until the stock market actually like started going crazy, like started dropping in a big way. The tech bubble. Yes, so it can be one of those precursors to something is wrong. Like, this should not be happening at all. It's terrible. It's terrible. Terrible sign. Terrible, terrible sign. But we will see. Hopefully stocks open up green in the morning so you can get some really nice puts for the downside if the markets do come down in a big way. See, man, why am I hit with these ads, bro? You're going to get me demonetized. It's crazy. It's crazy, man. The movie titles in theaters right now are pretty weak. Only 2 more months left in Q2. The industry needs to step up fast. Yeah, there's a lot of better titles coming later in this year. Like, once like School for Kids is getting out, like June-ish, that's where things start to pick up a little bit more. Be a great hedge. Yeah, gold, pretty good. We don't talk about my only green stock. Let's see, went up faster than the Bismarck. Yeah, that's true. That is honestly true. We got Doctor Strange and Jurassic Park and Top Gun 2 and Avatar 2 later in the year. Yeah, Avatar is the top grossest movie of all time for theaters. So, you know, that fourth quarter number is going to look really, really good. I'll just go here. What do you think will cause the massive sell-off of that we are waiting for the MOS? Well, a massive sell-off. I will tell you what it will be based upon. It will be based upon the perception that, hey, earnings are not going to go back to where they were in 2021, right? Maybe it's Q2 numbers. Maybe it's Q3. Maybe it's Q4. That's going to be a big part of it, because if we've seen peak earnings at companies in 2021 for, let's say, let's put it like this. You had like 20-30% earnings growth at most established companies like Google, Apple, Tesla. Like, all these companies had great earnings. Now, if that was all funded because of funny money, or a lot of that was, which in my personal belief it is, then how do you value those companies like you did in early 2022 or 2021? You can't value them at the same way again, right? If it takes 3 to 4 years, 5 years to get earnings back to those pre-levels. I don't know if it'll take that long. I'm just throwing out random numbers here. That's going to be a main concern. If you can't value a company, or if you don't know where to value a company, it puts a lot of uncertainty into the markets. At the same time, it's going to be the economic slowdown, the technical recession we will likely enter here in 2022, and then it's ultimately going to be the Fed. The Fed controls everything. So when the Fed cuts rates, that's when the markets crash in a big way. Yep. Believe it or not, you would think it would be the opposite. Money becomes cheaper, everybody's fine, and the stock market goes back up again. No. When the Fed cuts rates, that's when the markets will crash. Like, likely hit the low when the Fed cuts rates. I don't know when that will be. If the Fed comes out this Wednesday and they say, hey, we're only going to raise by 0.25%, the markets might hate that. They might absolutely hate that, because it's showing that maybe the Fed is closer to actually cutting rates back down to zero again. And that's the biggest thing the markets would not want to see is the rates being cut, because that shows something is not right here. So that's kind of what will cause like the markets to come down. As far as like the MOAS, you just need to see a catalyst for AMC though. That's it. Like any time really, in my personal opinion. I think liquidity is low enough that it could force shorts out of their positions anytime really. See a big enough rally. That's okay, because I invest in physical gold and silver. Yeah, that's not a bad idea right now. Thoughts on Mullen? Mullen's one of those high risk, high reward kind of trades. Like a small amount could make a lot of money, right? Because it's a very low market cap. All of that. They say they have like 29,000 pre-orders for their fleet van vehicles. So I think the second they deliver one vehicle, that investment would probably pay out pretty good, because given the market cap is so low. But it's expensive to raise capital to finance making vehicles, so they're gonna have to come out, issue more debt. They're gonna have to come out, dilute shareholders more. I own 500 shares. I sold the cover calls. I've made the position free, like 100% profits on it. I'm gonna hold the shares, but it's $350. It's like less than 1% of my portfolio. So it's one of those things. Say you have 1% of your portfolio in Mullen. If it 10x's in value, now it became 10% of your portfolio. You just made a damn good return. Like, one of those things. You don't want to be too heavy in it, in my personal opinion. But I think it's a really good speculative trade. But it's also not something I would put like a time frame on it. It could be 2, 3, 4, 5 years and the thing goes crazy. And it could lay dormant till then. Yeah. But I think it's decent for a speculative kind of trade. Sears confirms the entire float over 516 million shares is owned by 10,480 users. That's not true. That's not true. Boss Blunts just tweeted that. That is not true. Unfortunately. There's a lot more holders in AMC than 10,480. I can confirm that's not true. Hard to afford fuel and go to the movies. Yeah, gas is. I mean, it's killing me. I'm about to get a Tesla. I've been seeing a lot more of them on the streets. I think it's time for a Tesla or a Lucid if they weren't 250 grand or 160. What is it, like 163? They're like 80,000. Like, man, Peter Rawlinson, you're killing me, bro. Get a Polestar. I just want to see the world burn. That's not sinister at all. It's all good though. We're just capitalist, okay? That's what I chalk it up to. Like we're not too sinister on the world. We just want to make money if the world goes to shit, okay? That's it. We're just capitalist. I did not mean to I did not mean to delete your message, Mike Barr. That was my fault. Like Adam Aaron tweeted that. I mean, if Adam Aaron tweeted that, then I'm not going to question it. But if he did not, then yeah, I don't see Adam Aaron tweeted anything like that. But I know there's more than 10,000 holders of AMC. Like that cannot be correct. I know that for a fact. That's 100% fact. Like there's literally no way around it. I don't know where he said it though. I don't see it. Every day I'm hustling. Every day I'm hustling. I don't know. I don't see it. Maybe I'm tripping. But I don't see it. But I know it can't be true. It's an investor relations chat. Got you. Mullen. I talked about it a couple of minutes ago. Mullen's something, like I said, you can have a small amount of exposure to. It's not something I would like put a time frame on it. It's not something that is guaranteed to pay out. It's very speculative. It could do very well or it goes bankrupt. There's really you either make a lot of money on it or you lose all of your money on it. That's the only way to look at Mullen. You have to be comfortable with obviously making a lot or losing all of your money. That's it. That's all there is to it. There's no other way to put it. What? You dirty dog. You dirty dog. What the hell? But yeah, we do have some earnings this week too. We got the earnings. The earnings, baby. It's like 58,000 AMC NFTs. You have to be a shareholder to get the NFT. Okay, registered shareholders, still 4 million of us, according to Adam Aaron. Yeah, like 4 million. Like that sounds more realistic. But yeah, lots of energy stocks tomorrow. MGM reports, resorts, Six Flags, some travel names. Monday pre-market and after hours. Tuesday after hours, that's going to be the main key. You do have AMD, Airbnb, Starbucks, Lyft, and Caesars Entertainment. Wednesday, you have Tulio, Etsy, Uber, Skills for anybody that is still in that one. Moderna, CVS Health, Barrett Gold, Generic, Marriott, and that's all pre-market Wednesday. Thursday, you have after hours, you have Block or Square, Fubo, Lucid, Cloudflare, Open Door, Wish, DoorDash. I think that's Virgin Galactic. Pre-market, Shopify, Crocs, Penn National Gaming, Datadog, ConocoPhillips, Royal Caribbean, Wayfair, and then on Friday you have DraftKings, Goodyear, Under Armour, Sigma, Cinmark. So that could be important for AMC. And then I believe AMC is next week. Not this week, but the week after. Yeah, it's also the most searched for stock. Dude, AMC was searched more than the word stimulus check in 2021, which is crazy. $10,000 could be the price of AMC stock. That would be very wonderful. I'm not going to argue that. Fidelity is still pulling fraud, not allowing trades to go to lit market. The CEO is good friends with Ken Griffin. Yeah, they're all fraudulent. They're all corrupt in their own rights. You know, that's kind of just how it works. 10K could be how many years we've been waiting. Oh my gosh. Oh my gosh. 10,000 years. So like go back like 50 go like forward like 100 generations and then they get rich. Oh man, I'm selling. You ain't get my stock, bro. Shares would shoot all current DD in the foot. Aren't there like 20 billion shares in circulation? That has to be a typo in the document. I'm sure Adam Aaron will be tweeting about it soon. Maybe it's 10,000 like accredited investors, maybe. Bill Wang was buying on the lit markets. He should be a hero, not a criminal. Oh my gosh. Bill Wang. I mean, he was. He was driving up share prices like a lot. But then he kind of rug pulled everyone at the same time. So like people made a lot of money and then they ended up losing more money than they made if they had stayed in those stocks. So it's an interesting take on the situation. Thoughts on Adarin? Or Ater is what I like to call it for sure. It's got interesting prospects. I mean, there's the potential for like hype there, momentum, all of that, but it's on the threshold securities list. 41% short interest. Cost to borrow max of 271%, utilization of 100%, days to cover at 1.09. There is, I've heard, a lot of the float that is locked up. So that's going to be pretty interesting. Lots of call activity coming through too. Over the past week, 27 orders totaling 1.65 million, positive order value of 81%. So it's an interesting prospect. I think if you do get more activity, more momentum, people are buying the stock, then you could see the price go up really high. Like this stock went to like $50 back in early 2021. So it's possible it could squeeze. Kind of one of those things where you could put a small amount in, maybe you get paid out big, right? I know like Zip Trader, he like really likes this trade. I watch all kinds of different videos. He really likes this trade. Maybe call it Monday so you can bring that haircut. March, my sweetheart. Direct register shares with computer share. That's DRS. GME is all about that, but it constrains your ability to sell. Yeah, I never fed into the whole registering your share hype. I think you said 10,400 people that hold 516 shares or more. I just pointed out a video about 5 minutes ago saying that the haircut DTCC message that went out was basically identical to the one that went out in October 21 with a couple minor differences. Yeah, I said earlier that this is like this third time that you've seen these kind of haircuts. It's not the first time, but it all adds up and then starts to compound into a disaster for anybody using collateral, to remain in short positions. Yeah, futures up a little bit. Yeah, everything's kind of bounced back decently. Dow up 0.21, S&P up 0.21, Nasdaq up 0.38. Hopefully, I want to see a green start to the week and then potentially see that red after the Fed, and it'll make for some really, really good day trades, scalp trades, swing trades on the S&P. We do crazy stuff. How cinemas are going beyond studio marketing to lure moviegoers back, and good old AMC in the background. We love it. We love it. I still believe it's 10,000 years. Oh my gosh. That would be wild, bro. All right. I'm going to go ahead and get out of here. I am yawning. I am exhausted. Thank you guys for tuning in. It's going to be a huge week this week. I hope you guys realize how important it's going to be. You're either going to get that breakdown, potentially under 400, like you're at a very key level on the S&P, or you're going to see another bounce like we seen last March, and we could go straight vertical or we could go straight down from here. There's literally no other way to put it in my opinion. I don't think you're going to see a small reaction based off of the Fed. But if you are trading it, I would wait until the Fed actually does come out and say what they're going to do and give you confirmation of that. I think that's going to be very important. So that is it. Futures looking a little bit green. I don't know if that's good or bad for many people, but thank you guys for tuning in. Appreciate all of you guys. Missed you guys a lot over the weekend. But yeah, enjoy the rest of your night.